I think you might have answered this question before, but you hear a lot of people say that if you talk to the ATO, they will you can make a deal with them on, say, you owed 300,000, but you can offer them, so you can say, I can pay you 100,000 back, and they will usually sometimes accept that. But I think you might have answered that before, that you might be able to reduce the interest on the loan, but not the actual
Right.
capital.
Yeah. Yeah, it's funny, mate. Particularly during COVID, we heard that rumor start. It floats around every now and then. And during COVID, we were told somebody in Melbourne started talking about this, and it got all through Melbourne. And we've got an office and director in Melbourne, and was constantly being told, particularly by accountants, no, the ATO is cutting deals. And we were going, but they can't. It's not it's not them. It's not the sort of case officer's money. It's our money. It's taxpayers' money. Um, and they can't. But what they can, they can in two ways. Either you go through a liquidation, some sort of insolvency event, then you'll pay cents in the dollar. But nobody wants to do that. You've also got a hardship team, and I think it's it's interesting that it's called hardship because they're the hardest guys in the ATO to deal with, and you've pretty much got to be able to prove that you can't feed your family in order to, you've got to put in a statement of assets and liabilities and everything. They're very, very hard to get in. So I very rarely recommend people to do that unless they're, in their sort of mid 60s and maybe never going to work again and that sort of stuff. But anybody who's in business, anybody who has a home and everything, that's not an option. But you can get there through the same thing with looking at the interest and penalties, because that, as I said, not only, again, you've got 100, say you got 100, I keep using the number, you've got 150 grand in ATO debt, and we look at it and go, of that 150 grand, $30,000 of that is interest. Well, again, the ATO won't just write that off because you say, I'll pay you the 120. In fact, that's the quickest way to get a note. You have to put in a thing, it's called an application for the remission of interest and penalties. Again, there's a legal practice statement of the things that you need to prove. And if you miss one, it's a no, and you get one crack at it. But if you can find those grounds, and they're sort of things that generally, the general test is, you've got two businesses, you've got two painters, one's paid their tax, one hasn't. The way they level the playing field between the two of them is the one that hasn't pays that 11.34% interest compounding daily. So to be able to ask the ATO to remove that, you're actually giving them a leg up over the guy who paid his tax. Now, the ATO will do it. The test is it fair and reasonable, which is, classic lawyers thing, but that's the test. What the ATO look at is a whole range of things, but broadly it's stuff that's outside your control. The issue at the moment is the ATO have virtually said no more of those remissions of interest and penalties because we turned off the meter during COVID for about 9 months. And then after, when they restarted it, COVID was still going on. And quite frankly, if you can spell the word COVID, the ATO would remove the interest and penalties. That's all finished. They say, we've been generous, we've given businesses a fair run. Now we're going to go back. And it's harder to get that removed than, I mentioned they're here and they used to be here pre-COVID. On that, it's kind of here. That said, we're still getting them removed, but we have to do it in a slightly different way. And it's quite important around timing. We have to put, a much more detailed case to them and that sort of thing so we can get it. But that can make a huge difference because using that example of, went from 150, they've knocked 30 off, you're down 120. But that same business says to me, oh, but you know what? We've had debt for 5 years. We've been back 2 years. All that other interest they paid, if we can find grounds, we can go back and get that as well. So it brings there might be another $25,000 in refunds of the stuff they already paid. That comes off the debt. Or if you paid the debt, you actually get a check from the ATO.
You get a credit.
You get a credit. So you can either not pay your. So we get quite a lot where, particularly through brokers, where they've already done the deal and they've lent the money and they've used, they've taken money off the director's home, paid off the debt in full, but they didn't know us or they didn't think about us. And they come to us and we say, well, that's paid. Well, now let's go back and see if we can get that interest for the whole period off. And then and again, using that example, there might be a $50,000 credit on the thing, and you can either leave it there and it'll just get chewed up by your bazzers, or you can actually ask the ATO to issue a refund to your bank account.
Cool.
A lot you can do with the ATO. But again, you just got to know this stuff and know how to do it properly.